Morning, everyone. This is Mark De La Paz from FX Instructor. Welcome to this session about the ECB rate decision. Now, where should we start? Let us start by taking a look at some of the discussions that we've been hearing about the rate decision. So, for the most part, the overall, the consensus forecast is that the ECB will take a pause in its back-to-back rate cuts since Mario Draghi took the helm. Just some interesting historical info. The repo rate or the interest rate that the ECB uses has never been below 1% during the time of the former ECB president, during the time of Trichet. Of course, that was then and this is now. We now have a real economist at the helm of the ECB, someone who is seen by people as understanding what needs to be done. So since Mario Draghi took over, he's cut interest rates twice. He's brought them down to 1%. And as far as today's rate decision is concerned, people are thinking it will remain at 1%. Why? Let's put it this way. A rate cut by the ECB, or any central bank for that matter, takes time to filter down to the economy. Okay? So, it normally would take 2 to 3 months before an interest rate hike or an interest rate cut becomes felt by the man on the streets. So, the way I look at this, or I think even the forecasters look at this, because of this delay. Hey Jay, I should be projecting the website of FX Street for now. I should be projecting the calendar. Are you seeing something else? We're still not talking about the charts just yet. So you should be looking at a calendar at this point. There are things that I want to point out from the calendar. Okay, so I'm assuming that you're seeing the FX Street website, guys. I hope that's what you're seeing. Okay, Jay, only the calendar. All right, fine. We'll finish with the calendar and then we'll discuss the charts afterwards. I wanted to focus on the calendar first because this is not just a interest rate decision day, but when you look at the calendar, you also have a lot of stuff happening in the U.S. You've got retail sales numbers for December coming out. This is, of course, Thursday, so you'll also be getting your claimant count, your continuing claims data, and all of these numbers. Calendar was okay, and now it's blank. Let me do this. There. So, I wanted to start with the calendar because all of this data that will be coming out of the U.S. will also be coming out right around the time when we will be hearing, or we will be getting the press conference by Mario Draghi. Okay, and that to me is really important. What gets stated in the press conference is more important than the actual decision itself, unless, of course, we find ourselves surprised by a third rate cut. But again, we tend to think that, as with the consensus forecast, no third rate cut will be happening. Will be happening back to back today. Main reason for this is the central bank, the ECB, would need to assess first the impact of the previous rate cuts to the economy. For them to do that properly, they have to allow for at least 3 months from the first rate cut before they can say this should be factored in already by what's happening in the economy. All right. So again, in our rate decision, in about how many minutes? 25 minutes away, we don't expect to get anything. Well, I won't say it's an impossibility, but I would say that a rate cut right now is highly unlikely. Of course, if we were to get a sudden cut to 0.75, then I'd be the first to just go jump in and dump the euro. Okay, dump the euro preferably against a commodity currency. Remember, a rate cut by Europe to these levels would suggest that commodities would be benefiting from it. So maybe I will go EUR CAD or I would go EUR AUD, depending on just where the charts for EUR CAD or EUR AUD will be once this happens. We're not expecting any cut at this point. The possibility of a cut is there, but it's not likely. In case there's a cut, then automatically it's a knee-jerk response for us would be to dump your euro, preferably against commodity currencies. What are we going to watch out for during the press conference? Let's put it this way. There's a lot of talk, a lot of discussion right now. A lot of it centered on the need for the European bank, for Europe to refinance a lot of the debt that it has issued in the past few years. A lot of those debt that sovereign governments and banks issued 2007, 2008, they're all going to be due this year. A lot of people are saying because of this, the ECB has to continue providing liquidity in the market. The ECB has to continue buying bonds, etc., etc., etc. I would point out, however, that if you remember last December, we were surprised by a move by the ECB. What did the ECB do? The ECB did this massive LTRO program last December. That massive LTRO of the ECB last December actually takes care of the refinancing needs of the whole of the Eurozone for this year. So, this to me is actually one more reason on why I don't actually expect any surprise rate cut by the ECB today. The fact is, unless more problems crop up, there should be enough money out there to meet the needs of the Eurozone for now. Okay? Now, so what are we going to watch out for during the press conference? We'd like to hear from Mario Draghi on when he will start cutting rates again, on what kind of economic numbers does the ECB need to see before they actually decide to completely go neutral, before they actually say no more rate cuts for an extended period. For now, we're only taking a pause in the rate cut cycle, but we'd like to hear the criterion, the statistics that the ECB wants to look at before they change their minds in policy. Okay. Now that said, let us move to our charts. I mentioned earlier that I would rather look at taking something between euro and a commodity currency in case there's a sudden rate cut. Okay, here's what we'll do. We will take a look at those posts that you have first, and then once we've addressed those questions, I will go to what I want to do. So guys, if you have any questions for me, post it now. Robert, you anticipate 527 being tested in the days to come. Okay, let's, I guess. I know we're supposed to cover the ECB rate decision, but let's just start by taking a quick peek at GU. So how weak do I expect GU can get? Let me just point some things out. As far as that GU is concerned, we face a cliff at your 1.5270 area. In my chart, a break of 1.5270 potentially opens cable to a large sell-off. Okay. Now, normally that would mean to me that it would be an attractive proposition for traders to try to drag your cable down. So it's a question of what's your time frame. Are you talking about getting to 5270 again later today, or are you talking about give it until next week? Because if you're talking give it until next week, then my answer to you would be I would continue looking for a further test of that 1.527 area. When I look at this, I tend to think there's pressure to really take out that 527 region. Your higher time frames look very bearish. Your weeklies. For now, we have a technical rebound happening. See me again around those daily EMA lines. It could be by tomorrow. And then after I see those daily EMA lines once more, I'll probably see those daily EMA lines at a lower price. And after I've done that by tomorrow or maybe Monday, I would focus on the next attempt to push lower. Technically, there's no sense of urgency about taking out 5273 right now, but the big picture remains bearish. There's no good news to talk of that would have us believe that the big picture outlook would be changing. Okay? At the very least, you have to give me a nice base building before I think that the pressure to sell off is over, and that hasn't happened yet. Gold, I'm not really a bond trader myself. I know its impact in the markets, but personally, I don't know how to go to a counterparty and tell them I want to trade bonds in the secondary market. So I don't know how to trade this. If you invest in a bond, that's easy. You just ask a bank which bonds are available for them and that you can buy. But actually trading them the way we trade FX, you'd have to go to a specialist. You have to go to a bank trader, a bond trader who keeps a close eye on all these things. All right. So again, yes, we expect that we will be retesting our GU soon. It would be a while before we can actually expect that cable is out of danger of breaking your 5273 price point. Well, actually, I think that would be the easiest way of doing it. You just invest in an ETF rather than doing it yourself. Remember, monitoring bond prices is actually, well, let's just say it's expensive. Unlike FX, you don't have a lot of public sources for news on the bond market. Okay, does it impact your gold prices? Right now, I don't really see how the rate decision will have an impact in gold prices. The only way I think that it could impact gold prices would be if we get a crazy decision like a rate hike. Okay, a crazy decision like that may actually see your gold gold prices dropping. But again, that's a crazy decision. It's it is impossible. What is the impact of banks parking their money in the ECB instead of lending them out? Well, that is the big issue, isn't it? Okay, let me get back to overview. One more reason why it is unlikely that the ECB will be cutting rates this early. They want to come up with a method to convince the banks to, as you said, lend out this money that they now have. Remember, LTRO last December actually gave, I forgot the numbers, it gave the banking system in Europe about 460 billion euros to play with. And what did these smart guys do? They put the money back in the ECB's vault. They park the money. They're getting interest out of it. There's actually a term for that kind of trade, which I forgot. But it's basically cooking the ECB with its own fat. Okay, because the ECB, the money came from the ECB itself. So impact of this would be what? Well, ECB has to come up with a method to convince the banks to lend money. It is going to be regulatory. Perhaps they can do what the Chinese would do. Just by fiat, tell the banks, you can't keep that much money in our vaults. Or they can start deducing the interest that they pay the banks for doing this. Now, remember, our interest rate, the interest rate that we talk about is different. The repo rate is different from the interest rate that the ECB actually gives the banks for keeping the money in the vault, in their vault. Okay, so those are separate interest rates here. But it is likely to pressure the ECB to come up with regulations to push this money out into circulation. For the currency market, the moment that these monies actually starts circulating, it adds to the pressure for the euro to weaken. Okay, so we need to hear from the ECB first. What are your plans? How do you convince the banks to lend this out? Once that happens, once the money goes into circulation, that's the time then when I would expect that your euro will be even more vulnerable given the supply-demand issues. Could you explain how to trade? Oh, again, no idea on how to do it. As Rob suggested, you might want to buy ETFs, but buying ETFs largely means that you're not actually holding on to the actual bonds. If the bank that's running your ETF fails, then you could have a problem. Is it advisable to trade bonds? From my perspective, I mostly currency. I wouldn't know, but it would be advisable to be aware of what's happening in the bond market. Remember that what happens in the bond market has an impact in the rest of the asset classes. Take, for example, our rally right now in Euro, in GU, and even in Aussie. What has driven your Euro up? Is it because the ECB is not going to cut rates? Some people have suggested that. I tend to think not. Yup, we were bouncing right off the start, but the main push up in our Euro, in our Aussie, happened after the auction, the debt auction by Italy and Spain. Basically, they paid half the yield rates that they were paying before. And because of this, it was seen by market as, hey, looks like we've got risk appetite. And after this, we saw our currencies basically shooting up. We got this appetite. So I wouldn't know myself if it's advisable to trade bonds. I tend to think it's expensive. If you want to invest in bonds, you know what? You can find a broker that would allow you to invest in a bond and use that money as collateral for trading Forex. There are actually brokers that would allow you that, not FXEM, not the retail brokers, but the big ones. Okay, they can allow you to do that. If they can, then that's a plus for you. As long as you have at least a AA rated bond, you should be making a small money interest there, and then you don't have to put up more money to trade Forex. Okay, you're basically using those bonds as collateral. That can be done, but it's not something that retail brokers would allow you to do. Well, Robert, just sign up in the forum and go to the link for opening the room. It's that simple. It's HotCom as well. So if you have trouble about accessing the room after signing up, just email me, and I'll see what I can do. There's my email. Terry, yup. The main event right now is not the rate decision itself, which will be in 8 minutes. I know the session is supposed to be the rate decision, but it's a non-issue. We have very little hints that a rate cut will be possible at this point. Of course, we will take a pause once the rate decision is happening. We would, of course, want to see what's happening. We would want to see what the announcement is, just to be sure that we're not missing out. But what matters more is the comments from Mario Draghi. We'd like to know if this is just a pause or if this is going to be a short pause. They're just waiting for the results of the previous rate cuts, the impact of the previous rate cut, or will this be the start of a long pause? Robert, yes. I still view that cable could weaken. Remember that in the current situation that we barely have long-term traders anymore. Everyone seems to be an intraday trader. I'm not very comfortable with scalping the market, but from someone who used to be long-term swing trader, now I'm more intraday trader. I rarely hold on to positions overnight anymore. So risk appetite and risk aversion can go in and out in the markets these days for a matter of hours only. And then sentiment changes. Hey Ram, you know me. You know how I've changed from trading what? Twice, 3 times, 4 times a week? Although I'm still not as active as you or the others. Okay, let's take a look at cable. Sophie, okay, we'll do a technical view of cable. And what do we see? We look at cable and we find ourselves just around a strong daily support, your 53.63 region. We also have that as 38.2 fib retracement level. We've got mixed signals in the daily indicators. Unless you give me an hourly close above 53.64 at least. Unless you give me an hourly close above that 53.64 area, I would look at this as a strong resistance level. Focus is on getting myself rejected. So I'm not interested in buying GU. I'm interested in getting an excuse to take the sell side of GU. I look at this and unfortunately, what we're getting are mixed signals, dailies, 4-hour charts. Even the hourlies for now look bullish. It is possible that at the close of the hour, I'm going to get a shooting star. Not exactly a top-level reversal pattern, but one more hint that we have nice resistances and we might be able to sell later on. I'm not going to sell immediately. I need a multiplicity of signals telling me that the bulls are out of the way. Teddy, I won't be around for the press conference itself. I think there is another section of FX3 that has a chat that's on for the actual press conference. From what I've seen, it's a bad idea to actually be looking at the market during the press conference. 1 minute you swing up because of one line, one comment. The next minute you swing down because of another comment. You would be better off waiting until the press conference is actually over. Look at the bullets and decide. Here is what was mentioned throughout the press conference. There was an emphasis on waiting for the results of data, the results of the last 2 rate cuts to filter to the rest of the economy. If that seems to be the gist of the press conference, then to me it's a suggestion that there will be no rate cuts in February. Probably March you will get one. So it's best to just wait and get the full gist, the full idea, and then decide what your outlook is going to be based on it. Thank you, Ram. But watching the market while the press conference is happening, by the time I say something, I relay Okay, by the time I hear it and I relay it to you, market probably would have swung up. By the time I say I'm buying and you hear it that I'm buying, it's likely that markets are already beginning to pull back. Remember that this is not automatic. I'm going to listen myself, and then it takes time for the info to get to me. It takes time for us to be able to analyze, to react info. It takes time for you to hear the info from me. By the time that all this happens, it's all over. Especially lately, we've been seeing very strange quick whipsaws in the market. All right, folks, we're just seconds away from the rate decision. Again, the only thing that matters is it really 1.0, or are we going to actually get a surprise rate cut? Surprise rate cut will have us thinking it would be a good idea to look at the sell side of our euro. Robert, I view 50 to 70 as a critical support. If we get a daily close below it, I think we can get a big sell-off. Unchanged 1.0. So what does that mean? No need to do anything. No need to jump in. We might actually, again, the focus going forward is waiting for the results of the press conference. But let's take a look at your euro. Let's see where would we want to get a rejection. Yep, I'd agree with them, folks. It's just the best idea now is to just stay sidelined. If I look at our chart, we have a resistance level at 27.90. We have 38.2 fib retracement at 28.20. This is also a breakout point for a double bottom in your euro. So what do I want to do? During the press conference, keep a close eye on these two prices, 27.90 and 28.20, 38.2 fib. If you somehow get a close on an hourly basis above 28.20, it might trigger, or it would trigger your double bottom in the 4-hour chart. It would mean that you may bounce all the way up, in theory, all the way up to your, let me get that. In theory, it would mean that you'll bounce all the way up to your, what's this? 29.71 region. In theory. Remember that we've already seen substantial price action in euro today. Kiwi Kid, we have a double bottom in our 4-hour chart. This is our double bottom. So breakout point at 28.20, 38.2 fib retracement. One thing. We've seen a big move already in euro today. So unless we actually get anything surprising from Mario Draghi, I actually don't expect that this will happen. Personally, my expectations are we don't hear any strange comment from the ECB. Probably they will say they are taking a pause, but only to assess the impact of the previous rate cuts. They will imply that come March, another rate cut would likely happen. And if that's what they will say, I would just look for a rejection from your 2790, 2820 later. I will expect that we will fail in our attempt to trigger that double bottom. Okay. Let's take a look at the stuff that I actually want to take a look at. So what are the stuff that I actually want to take a look at? I want to take a look at your euro against commodity currencies. Why? What's so interesting with euro against commodity currencies? Well, because euro is definitely one of the weakest currencies right now, and commodity currencies are, of course, the strongest of the currencies, which means that it would be a good idea to check whether you could expect nice trending markets in your euro, your euro CAD, your EUR AUD, EUR CAD. Now, I was actually checking EUR AUD earlier in FX Instructor, and unfortunately, our conclusion was we are already in uncharted territory. We haven't been at these levels since your euro was introduced. So, what are we saying? That, technically you look bearish, you have a nice downtrend, but this is not a chart where it would be a good idea to join any bearish breakouts. When playing with uncharted, the press conference will be in 40 minutes from now, which is really the problem, because the press conference will start right around the time where retail sales in the U.S. comes out, claimant count numbers comes out, and that really makes a mess of the whole thing. Are you responding to the retail sales data, or are you responding to the bullets from the press conference? And then the press conference will probably go on for about 30 minutes. So you'll have to wait for the whole 30 minutes to really get where the emphasis of the ECB is. Ram, I'll be having dinner. So unfortunately, I won't be in the room. But I guess I can, I'll be in the house, so I can chat. I can always monitor. Oh, thanks, Gold. Robert, at this point, I really expect that your euro will just continue to weaken. Yes, we have seen some improvement in risk appetite. We've seen some investor interest in euro-denominated assets as demonstrated by our bond auctions. But the fact is, this is all just a move to provide liquidity. And it helps solve the problem of solvency, but it doesn't fix the problems that we have in the Eurozone. Okay, it doesn't help the problems of slow growth for most of the economies. It doesn't solve the problem of difficulty in generating employment for the young people and the high indebtedness of the countries. All right, guys. Wow. Looks like we've actually run out of time. Folks, I guess I'll just thank you for joining me. Again, just don't react to the by-blow of the press conference. Wait for it to finish. Get the summary of it. Get the idea behind the press conference. And if it suggests that, as we expect, this will be a temporary pause, a brief pause, then we will remain bearish in our euro. Okay, guys, thanks for joining. And if you'd like to talk to me with me about this, you can always join us at the FX Instructor room. I'll be there in an hour.